Good afternoon, everybody. This is Jeff Scott. It is Sunday, September 15th, 5:14 p.m. Big news just hitting the wires, besides the fact that there's no scoring in the Manning Bowl, which is in the first quarter, which is kind of shocking. I'm sure there's plenty of time left for some really big scores. The big news is that Lawrence Summers has declared that he's not interested in running for or being the Fed head. My bet was that Summers was not going to be great short term for the market. He would have been great for those folks that want to see a strong dollar, but I'm not sure that the market would have been good or bad. So we'll see if the market responds. These are early futures, but these go back to Friday and will not reflect any of the news. I apologize for all my alerts going on. I just booted up TradeStation. It'll do that for a few minutes, unfortunately also likely eating up some of my bandwidth. So let's go ahead. It is 5:15. My wife's waiting for dinner, so I'm going to try and get done with this by 6 p.m. And I'll be posting on the HGSI site sometime this evening, as well as the other usual places. Recording, sound, audio. So I left the title the same because I still wonder if we're setting up for a big year-end rally, or will this be another September swoon to remember? If you don't know what that means, you need to check your seasonals. There's one of my email addresses, also Jeffrey@highgrowthstock.com, works very well. Quick slide presentation as usual. Start with the disclaimer, this is for educational purposes only. Any recommendation in the spirit of education not to be considered investment advice. I'm a doctor, not a broker, and remember, most physicians lose all their money with their investments. And I am independent, which allows me to say what I really believe, and anything that I've demonstrated, tools that I've paid for by myself. I am a homer for HGSI. That is true, but it's because I'm a big fan. And I know that the best way to get continued product development is to have lots of people buy the software. I have a lot of programs on my desktop, which I'm certain probably noticed on the way in. I need a real-time charting platform. I use TradeStation or Thinkorswim. I actually use NinjaTrader multi-charts for my futures trading, which I do day trading. But for stocks, it's TradeStation and Thinkorswim. For market analysis, I use High Growth Stock Investor. I use EdgeRater and ETF Bandit, especially EdgeRater for market timing. And for seasonal analysis, I use Magenta Trader. I'm also a huge fan of Ian Woodward and Ron Brown, and I use a number of their tools. I pay for their newsletter and their daily market updates, which we get for a couple $100 a year as part of their roundtable. And then they have a free weekend reviews, which Ron posts to the website on a regular basis. And then Ian's blog, which is outstanding, especially at Market Entropy. People ask, what kind of style do I have? Well, I don't know what to call what I do. I do both day trading, but my day trading is predominantly futures. And for stocks, I'm a swing trader. The only time my stock trades are short acting, it's when I make a mistake and I get stopped out quickly. Duration of my trades, certain things like Celgene, I think I'm married to, and I've been in for quite some time. A lot of the more speculative plays I go in and out of. One thing that's always disheartening, or maybe it's more setting attitude, is when I look and I see that a lot of the stocks that I've owned in and out of in the past end up becoming very cheap stocks when they blow up. And one thing to remember about high growth stock investing is on some of these smaller high growth stocks that are very exciting, frankly, they have a tendency of falling like boulders if the market corrects. Here's Ian and Ron. I'll talk about their upcoming meeting in a second. Some of my influencers are Alexander Elder. Here's his books. Van Tharp, Position Sizing, Money Management Guru Extraordinaire. Morales and Catcher have taken O'Neill's teachings to a new high. And then O'Neill, the master himself. Bigelow I use for candlesticks, and you can see some of my favorite websites. I always start my analysis by wondering, where are we? And I think we remain in this period of uncertainty where we continue to have little legs up. And I mean little legs up. I'm not expecting a 20% run up from here by any means. I see little 3-5% runs and then a pause for refresh. Or are we about to see that big 20% down? Well, that 20% would be down, but we haven't seen something at 10% and now coming up to a year, and you can only escape the inevitable for so long. And whether I'm looking at an index, a sector, or a stock, I see this pattern repeatedly, and I want to be buying as I'm breaking out from a base. I want to be selling as I get close to the top, and sometimes it's hard to figure out where we are and where we're not, especially when we're in that stage of uncertainty. And as I've shown you before, if we're living in this land where we're going to be Darvasing box up and down in a trading range, which many folks think we've already seen the high for the year, and we'll be in a trading range for some time, I want to sell resistance and buy support, and looking for breakouts and breakdowns. On the way up, I want to buy pullbacks. On the way down, I want to sell retracements. So I always start my weekend review by doing bottoms up. Although I call this a top-down review, I start my weekend bottoms up. During the week, I'm all top-down. So I looked at multiple lists. I came up with my top 500 stocks to review. Here's some of the themes that I saw. Another positive week for the market. Now, this was a different type of a week where several days seemed to pull back in the morning, and I thought I'd finally have a down week for my portfolio, the major indices, and then we finished up. So I guess that's bullish. It beats finishing down, but it wasn't a steady day up, 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 and away. We have gone from oversold to overbought, and I'll show you some evidence of that when I look at some of the charts I look at in EdgeRater. I'm not sure if I necessarily new leadership, but technology, look at Intel breaking out. Certainly some of the internet retailers and the internet sites have been hot. China stocks are hot. And a couple of weeks ago, somebody asked Gil and Chris about why China stocks, because the concerns about their books and everything and their data. And, you got to go where the money's going, and right now China stocks are hot. Solar, mostly China stocks, but solar seems to be running, and not just First Solar, but things like JKS. And then, boy, I hope you got some gambling stocks in your portfolio. They've been on fire. Some are hard to understand based upon fundamentals like Caesars and MGM, but Las Vegas Sands, Wynn, MPEL, all on fire, BYD, so many choices in that group. On life support, gold and silver, I thought they were rallying up, pulling the steels and the coal with them, but they ran up and then they ran down. And home builders clearly are beaten. Now, last year in November, I know this is only September, I was at the Traders Expo in Las Vegas and started nibbling on home builders and got a great run out of them. But right now, maybe they're going to set up and do the same thing, but right now they look like they're hurting. Bottom fishing, these are stocks in industries that I wonder if they're not about to start to turn. Now, some of the earnings per share growth in the traditional fertilizers don't look so hot, but you'll see they made it up on the list this week. Something like Bunge, it's BGE, we'll look at it and we'll see for sure. Bunge looks interesting. Now it's in the agricultural services, not fertilizer category, but it's got good earnings per share and it looks like it's bouncing like the rest of the fertilizers. Refiners had a big downgrade by one of the brokers this week, yet as I looked, I saw Western Refining up $1. If you look at CVR and a couple of the others, trash stocks, low multiples, and some starting to get some unexplained, or not unexplained, but accidental, as Kramer calls them, high dividends. There are other special situation, interest rate anomalies, where stocks from good companies, mostly in the mortgage, in the mortgage REITs, are having interest rates of over 13%. But I also have to temper my enthusiasm by remembering the seasonals, that this is a period where the market has had some of its major corrections, September being the worst, one of the worst months for the market. And then, October overall is a positive month, but you had some major corrections there. As I mentioned before, I am a homer for the website highgrowthstock.com and its software. So just a few comments about it, and then we're going to jump into the review of the week. I have not logged in, so you could see everything that I'm showing you is free. 30-day trial, no credit card. very few companies will give a trial without a credit card. On the website, if you go under events, it'll show you a number of important things. Most importantly, this is the next and possibly the last workshop that Ian and Ron are going to be putting on, October 26th through 28th in Palos Verdes, California. I'll be speaking, Chris White will be speaking, Gil Morales will be speaking, but most importantly, Ian and Ron will be leading a great program, and I believe my buddy George Lee will also be speaking, which will be an extra benefit as he did last year. Also on here is a section where it's my blog, where I'll be actually starting to blog during the week, but we'll be adding my movie up here later, and it's just under the website, in fact. All right, here we go. You can see all my old, or many of my old YouTube presentations will be placed up here. In addition, you have Ian's blog. And when we have market entropy, and I think we could say we're in that scenario, you get to see a lot of Ian comments. The last one was on the 11th, and we'll probably be getting another one tomorrow or tonight, if I guess correctly. All right. So other things on the website, besides the free software, Ian's blog, under investment strategies, you'll also see, I'm overloading, I got too many things going on, so let me close a few things while I'm waiting here. Quit Skype. You'll have Ron's blog where he posts things. So it's a great thing. If you download the program, make sure you go into support, add-ons, and run the two exec files that you're going to see at the top here and here, so that your software and your charts look like mine. So on that note, let me shut down the PowerPoint. That'll free up some of my computer resources as well. All right. Let's start by looking at TradeStation so I could free my resources up from there as well. People know I like to look at the indices here, and a couple of things that I want to point out is I look predominantly at the Elder Impulse Indicator here. I've talked a lot about the MACD divergences. We're not at a new high yet, so I'm not going to comment it on here, but we had a lot of MACD divergences back here. Green is the buying window is open. Red, the selling window is open. Blue, you can buy, sell, or hold. You can see the S&P 500 has healed a lot from 2 weeks ago, getting close to the top of the channel, but not at the top of the channel. Everything is green on the daily, the weekly, blue on the monthly. So the S&P 500 looks much better this week than last. If I look at the Dow, up at the top of the channel, you can see big stocks had a nice week. At the top, green, green, and blue. And it looks like this high is giving us a higher MACD. So the MACD is showing buying pressure. The NASDAQ is blue, green, and green on the weekly and monthly. So it's been longer term a little bit stronger, keeping green versus the other larger stocks. But this clearly was a week that the large stocks caught up. And you could see the NASDAQ turned blue on Thursday and Friday, but finished with a close near the high. So in the essence of bandwidth, I'm going to shut down TradeStation and stick with just HGSI and Excel for the rest of the show. I also like to use HGSI to give me a clue to how the different stock sectors and groups were doing last week, over the last week. And I measured both Friday to Friday and Monday to Friday. And I have a number of groups which I like to point out. Some of the groups, as you'll see, are, I'll say my stocks, but I would not for a minute count that I ignore my stocks over the week. And in fact, at the end of the week, my stocks look more like my buy watch than what I had at the beginning of the week. So if we start with the S&P 500, just to give you an idea of the strength in the market this week, and it was pretty strong. The S&P 500 should be down here around the 2.0 range. Here it is. So the S&P 500, was up 1.98%. That tells you how strong the week was. Growth stocks, the HGS 100, which last week was a little bit less than 100 stocks because of the weakness in the growth stocks when I was looking at them, performed about the same as the S&P 500. And the IBD 50, which has the benefit of being a smaller list, was way up here at almost 3%. So the IBD 50 really outperformed. So that tells me growth stocks are still doing well. Now, I had a balanced portfolio at the end of the week, so I was concerned about what this would happen this week in the market. And somewhere you're going to see my stocks, and my stocks had a, you know what, I'll take it every week. If I had not managed them, they were up 0.93%. Those who were here last week know I had a really big week last week. But more importantly, the stocks that I looked at last week and the stocks that I talked about buying, that's what matters to me. And as you can see, if I bought the buy list on Friday and sold it on Friday this week, end of day to end of day, it was up 3.23%. So these stocks were working, whether they were bottom fishers, which is one of my watch lists, whether they were breakout EPS all-stars. So stocks that were bottom fishers last week, all of them were up. Stocks that were breakout EPS all-stars had a good week as well. So I've done something here it doesn't like. Hello. All right, so it looks like I've locked that up somehow. Well, that is a first for me to lock up Excel. So let's save this. Let's open it right back up. All right. So my bottom fishing stocks, my breakout EPS pullbacks, all my favorite groups were up high. What's interesting is some of the bearish groups, 4 and 9 day crossovers, were up at the top as well. So this was, I think you could say, a rising tide raises all ships type of a week. Best stocks under $10 that I pointed out the week before as being a strong group was up 3.73%. Demand short-term growth stocks up 4.4%. So if we just go down and look at some of these stocks that were up. Fortune Brand Security, we looked at that one, a security provider up 8%. Perion Network makes a credit mail for AOL and others up 7.25%. A home builder was actually up 6.7%. I talked about Triangle Petroleum, it was up 18%. Kodiak Oil, I think, is breaking out, was up 2.8%. Blocks was up another 10% week to week. Here's that JKS Solar was up 2.3%. NetQuin had a huge week. EdQ was up 28%. So a lot of smaller company stocks leading the way, which is typically what you see on growth stocks. This is the Monday to Friday. So when I looked at the Friday to Friday, just for comparison, same things were here, bottom fishes, EPS, growth stocks. If I remember correctly, the market opened down a little bit on Monday and closed high for the day. So if I look at from Friday close, the S&P was up 1.98. And my holdings that I had last week, if I had kept them the same, I said were up 0.93. If we look, we bought these things on Monday, which is probably more important. What we saw on Monday was even bigger gains, over 7%. So the open was actually below where it closed on Friday. And if I look at my holdings, if I had bought them all on Monday, it would have been up 1.52%. And the S&P 500 actually only up 1.88%. So what does that tell me? It tells me that high growth stocks actually opened down on Monday. And as the day went on, they closed higher. You can see HGS 100 was 2.3 if you bought at the open. And the IBD 50 is probably going to be up here somewhere, even further up, was up 3.21. Now, I think if I didn't confuse you, then God bless you, because I confused myself. But basically, the point I wanted to show you was that I'm picking end of that week, Friday to Friday, as my standard. On weeks when the market opens down, I would be better off picking Monday. On weeks that the market opens up, I'd be better off picking the Friday to Friday. And I do it so I can be consistent, but I'm going to compare the two as we go. And this was a week where the market opened down, so it actually exaggerated the performance. Ian's bucketology, clearly in the bullish camp, was 75% of stocks above the midline of their Bollinger Bands. And as you can see, 10% above the upper band and 15% in the top 10% and another 18% in the top 20. So top 20% and upper bands takes you to about 42%. This is getting into territory that one expects these stocks to pull back towards the center. Part of why I thought we were getting overbought. And here's the Hindenburg, and you could see, I guess we could say we've negated the signal of August, as we've gotten a month now without another signal. I do point out the fact that in 2007, when we peaked in our market, there was a double peak in the summertime and two sets of Hindenburgs, and these will be more important to me if I start to see another set of Hindenburg signals over the next week or two, and that would suggest even more concern about a market pulling back. So at this point, let's open up HGSI and see what we can find out. So I like to start HGSI by going into Ron's user groups, which will be down here under Woodward and Brown, and looking at Major Markets Plus, and then ranking thing with the T1 top-down analysis. This is looking at a several-week performance. I said large stocks were starting to move at the end of the week, and we'll see if we can see that. But if you look at over the last couple of weeks, the leadership has been in the small stocks. And let's take a look what we can see. Small cap 600, NYSE, which is a balance, big and small, the Dow, NASDAQ. This is what you want to see in a bullish market. You want to see the indices leading, and you want to see the volatility of the dollar on the bottom. It tells you why we had a strong week, or why it felt like a strong week. So let's take a look at a couple of different things. We'll start with the S&P 500. And let me shut down all right. So as you can see, we've had this pattern, and let me tighten this up a little bit. Here was our big pullback that ended in November. And since that time, we've had run-ups, little pullbacks, run-up, pullbacks. I've spent exhaustive time on this. I'm not going to go over it right now. Except the point I wanted to make is that we've gotten above the 50. The 18 has gotten above the 50. The 17 is pointing up. We had a kahuna a couple days back. Looks like that was on Monday, Tuesday, on Monday. And right now, the S&P 500 is clearly pointing up. And my hope is, my target is to get back up to here, and a lot of folks think we're in a trading range between, say, in this neighborhood, and it'll be interesting to see where we go from here. But right now, pointing up, still red on the bongos, but nice to see we broke above the 50-day and held. We look at the Dow, it's still strong, and we'll see breaking above the 50 on Wednesday, pulled back to the 50 on Thursday, held on Friday, also a kahuna earlier in the week, 8-day turning up, 17 turning up, and again, price above the 50. And, the concern was whether or not we were going to get a 50 crossing down, and it seems to be stable for now. If we look at small stocks, let's take a look at the Russell 2000. These have been leaders, and you can see that they are looking just like the others, but they're much closer to their previous high. And two, are we going to be in a trading range here? It'll be interesting to see, or can we take out new highs? 8's above the 50, 17 looks like it wants to cross above the 50. All this will be considered bullish. We haven't had a big pullback since one ending in November last year, and that remains something I'm looking for. If I look at the NYSE, which is a nice mixture of 4,000 stocks, give or take, one could see a mess. But Pocket Pivot and Kahuna earlier in the week, significantly above the 50-day moving average and getting out to all-time highs. It'll be interesting to see if this market has enough push to take those out. If I want to go down and look at some of the internals in the broad markets, I'm going to go to number 2B, and these are calculated, so I'll get volume on these. And then I'm going to look at the I indicators on the S&P 500 to get an idea of what's going on with the internals. So we had the DI crossover that we were looking for last week, and the Bongo Daily went green. This is the S&P 1500, and the force indexes are all green. Still the weekly Bongo is red. What about on the new highs and new lows? We're painting green, which means here's highs and versus lows continue to point up with the 13-day exponential moving average. It's above it, which is obviously a good sign here. And down here you can see with the light or the dark green, light green means new highs, new lows greater than zeros but less than 65. Here the new highs minus the new lows are greater than 65, and hence the darker green. So bullish looking here. This has been a change from where it was a couple weeks back. If we look at some of the accumulation, we see that the A's have crossed over the E's. We see the D's and the E's are turning down, and the A's and the B's have turned up, which is nice to see if we want this market. If we look again, A's versus E's, but also the percent ABs over the 10% moving average has increased. Excellent. If we look at AB versus DE, we can see again it's turned up, which we want to see internally. If we look at how the number of stocks trading compared to their moving average, those above the 200, above their 30-day, are above their moving averages, which is bullish. We still got to see those above the 50. This was the 20 and the 30. 50 is close, as is the 200. I'd like to see all of these above to feel that all is clear. So market internals have definitely improved. And just very quickly see if we had any 5-to-1 days or 1 to 5 days last week. And you could see back here, which is probably Tuesday, we had advanced decliners greater than 5-to-1 and then advanced decline volume greater than 5-to-1. So bullish tendencies showing back up in the market, a lot of healing underneath, feels better, had a couple of good weeks in, still a traditionally tough time in the market. I like to look at industries to see which sectors or which parts of the market are leading. And under my top-down view, which I'm not going to spend much time with here, you could see that I've got 146 different industry groups. I want to know what's working now, so I'm going to go into the first 2-day. I see that 146, we're now up to 72 positive minus the index, so 71. And on the force index down, we only have 1. So clearly strength in the market is shown here as well. So top-down investing, it means I am going to go through the top 10 and see if there's anything I like that you might want to be interested in as we try to find those leadership growth stocks. In the pharmaceutical index, change to index group. Pharma, this is a potential takeout candidate, and it had good volume, and it skewed everything in this group last week. So I don't think this group would have been here. A lot of interest showing up on foreign companies and potentially acquiring this. So let me clean this up a little bit. So you can see have been pulled back to that 50-day moving average, had a Kahuna huge volume come in on Friday, DI crossover, everything turned green. There are some news reports that say potential acquisition at about $52 is coming. I don't know that, but I do know that it had a huge breakout last week on Friday. What else is in this group? One is a generic lab company, and it's, as you can see, breaking out to new highs. We've looked at it several times. Had a great week. Everything's green. Had a Bible gap up, a couple of kahuna days. The stock looks like it wants to go higher. I believe the index, or Pfizer is the other one, and Pfizer is not as nice of a chart. It's below the 50. I probably wouldn't touch it until I see it break out of this range between the 50 and the 200, but Pfizer is attractive with 3.4% dividend. I only like to look as far back as we have before the index, and then we get the index coming in. Special situations or interest, a couple here, let me point out, I forgot they're in this category. Endocyte has a pattern that I like a lot. That pattern is it pulled back to the 50, a little deeper than I'd want. I got 3 kahunas, volume coming in on Friday, a DI crossover, mostly green here, doesn't make money. It's a developmental company, but I know I put my stop a little below the 50 if it trades higher than the high of the day on Friday, and I'll see how far I can ride this one. Also interesting to me, Net, which is a generics manufacturer, looks like it's breaking out. Now, a little bit of a gravestone doji there, so maybe it's going to pull back, but it had a Bible gap up here on Friday. It's got earnings per share that are fairly extraordinary. Perhaps Wall Street is just finding this. It would have been nice to have found it a couple of weeks back. You could have, if you look for kahunas breaking above the 50-day moving average, which is one of my favorite screens. This is one to keep an eye on. And then Acorn, which is a small biotech, made a recent acquisition and the stock woke up here. Pulled back down to the 17, got a pocket pivot and some volume. It's got earnings per share growth. Not sure I'm ready to jump into this one now, but I'm going to watch this one and put this on my buy list as well. That's the pharmaceuticals. Next on the list was airlines. I own Delta. Delta got added to the S&P 500, or going to add, had a nice little pop. And you can see Delta's had a nice little jump up here. This one it got added. But it earns it. It's got great earnings per share. It makes money. There are others that looked interesting to me in this group. I liked Spirit Airlines. I hate to fly them, but it's sort of a shallow pullback at the 50 with the pocket pivot. If it moves from here, it's got great earnings per share growth in a good group, something that I'd be taking a look at. And then Hawaiian Holdings, not the best of the bunch, but one of my favorite chart patterns. Pull back to a rising 50. Kahuna on Friday, looks like it wants to run again, and volume and some earnings coming into the stock. So airlines was the number 2 group. Number 3 group was internet retailers. So there's a lot of Chinese stocks here. We'll look at the top 3 because I like them all. Youku is a Chinese internet retailer. Doesn't make money. Bunch of kahunas last week, breaking out. Everything is green. It's already had a nice run. It's getting close to the high jump bar, but it's not there. Certainly one to watch. Netflix. I think Netflix is cheap. I think Netflix is potentially a $400 stock. And even though it looks like it trades at a huge multiple at 288, if it makes some of these numbers here, it's going to have a multiple that's closer to 100. And I think this is an interesting play. We're going to drop off a 13 and a 13, which is 26 cents, and you're going to replace them with 95 cents. So you're really looking at 50 or 69 cents of added profits. If you kept a 200 an 88 PE, that's you know, you're not going to keep that, but that's a huge jump from here if you make those numbers, which is why I think the PE comes down and the price goes up. Like Netflix. And then Orbitz Worldwide has been sort of dead, but it's been dead on the 50-day moving average. Had 2 kahunas in the last week, has some volume coming in, makes money, although not much growth seen here. I like buying low-risk scenarios. This is a low-risk scenario. I'm going to set my stop at 9 1/4. 9.5. Set it right below the low of the day on Friday. I know where to set my stop. Let it take out the high of Friday before I buy it. Volume, kahunas, 2 kahunas on the 50. It has my interest. So internet retailers look strong. Semiconductors. I mentioned Intel. And let me just look at a couple of these real quick. There's a lot of solar on this list. Here's Intel. You know, I'm not recommending you go out and buy Intel. I own some of my long-term holdings. And, you know, I look at this chart and I see a pullback to the 50 weekly. Pocket pivots on the weekly. You know, is it going to run from here? It's got a bunch of processes coming out here. Be interesting to see. I don't love the earnings per share growth, but it does make money. And on the weekly daily chart, it broke above the 50 with a pocket pivot of kahuna, the DI crossover, everything turned green. That's a very bullish looking pattern. And oh, by the way, boring old Intel pays a 3.8% dividend. Trina Solar, I don't like the earnings per share growth on this one, but I like the stock chart. I own some of this. I'd like to see it move up from here. I'm looking for something to come in and tell me to buy more, like a pocket pivot would give me an add-on. Kahuna, something else exciting would be nice to see come in there. Also on the list, Himax. This has been an interesting player for me. I own some of this. They make a lot of the components of Google Glass. In fact, Google came in and did an investment in them a couple of weeks ago. Stock sold off here when it looked like Google Glass was going to be delayed. But every time somebody talks about Google Glass, the stock makes another move up. Everything's green. It's had a number of Bible gap ups in the recent future. I like JKS because it's got a nice pattern like Trina Solar, pullback, 3-day pullback, looks like it wants to run again. Great earnings per share growth coming into a stock that is a turnaround play. You saw it lost $5 last December, so you know it's going to have better earnings than that this December. So lots to like in the semiconductor space. Top-down investing, you go through and you top to bottom. As I mentioned, fertilizers look like they're making a move. Here's the problem I have with some of these fertilizers. Here is Mosaic. Boy, is this thing pulled back far. Now, you're under the 50. I'd like to see a break above the 50. Its earnings per share are contraction, but it makes money. Trades at a multiple of 11, small dividend, beaten up, but 3 pocket pivots in 5 days in the kahuna. Something's going on here. It's waking up. Potash used to be the king of this group, and it looks like the same pattern. Again, no earnings per share growth, but it makes money. Trades at a multiple of 12, 4.3% dividend yield. You could argue that this looks like a bottom in here, and it may play around here for a while, bounce between that 17 and that 50 till it breaks above it. Then it has to get above the 200. But with that dividend yield, probably not a bad place to be in. Here's Intrepid Potash. I think what's happening here is there was a Russian and Belarusian potash cartel that when it seemed to break apart, things sold off hard because that probably will affect the long-term pricing or short-term pricing of potash. And they put the head of that company in jail. The largest shareholder has agreed to sell. And if that cartel starts to happen again, then I think you quickly get back up to the 200-day moving average on the potash plays. Monsanto, more of a seed company, and I'm going to put Bungie up here in a second. Let's see if I can go back on this another board and see what Bungie's. It's just BG. So here's Monsanto. Again, I don't love the earnings per share growth. In fact, it loses money this quarter, but it's growing. Had a pocket pivot on Friday. Everything is green. And here's the one that interested me, Bungie. Why does this one work for me better? Look at the earnings per share growth coming into the stock. 1.5% dividend, multiple at 17 with some nice growth coming in. It's above its moving averages, and 8's above the 17, above the 50, above the 200. It's in a much better place to set up for a big run than the others. Not to say the others won't follow. Application software, Change Index Group. I mentioned NetQuin, Infoblocks. let's look at those two very quickly. This has been a hot group for some time. Look at those 5-day price changes. So Netflix Mobile. And this was up 20% last week as one of the stocks that we've talked about several times. And I think it's running. It's got great earnings per share growth. It's got a viable gap up, so you set your stop there. And then follow the Morales and Catcher viable gap up rules. Everything's green, looks great, makes money. The other one was Infoblocks, doesn't make money, although it's a growing baby company in a nice run. I'd rather go with the NetQuin with the earnings per share growth. Going down the list, next group we're going to look at is specialty stores. Zales, probably up, or Ulta Salon. Zales was here last week, was only up 2.6%. Two biggies, Ulta and Five Below had great weeks, breaking out. Ulta with the Bible gap up. You gotta love this. Bunch of kahunas that took out the 50, certainly squeezing here. Kahuna, Bible gap up, looks interesting. I think it's expensive. I'm a little bit afraid of that one. Five Below, a cheap retailer. Some of these retailers blew up, some of them did well. This is one that did well, and you can see it's got some major earnings coming in. It's a young stock, small company. Number 9, packaged food and meats, boring, but let's look at boring with setups. All right, so here's Kellogg, pretty substantial pullback. It pays a 3% dividend, it's got 11% short interest, not a whole lot of earnings per share growth in the near term. Kraft Foods. These are defensive plays in my book. Had a kahuna on Friday. It's got to get above the 50. Campbell Soup. I can't imagine having these things in my portfolio as a growth stock investor, but they're all got the same thing. Deep pullbacks. Dividend 2.7%. Those to me are defensive plays. What's the next group? Group number 10. Look at Disney. My goodness gracious. I guess it's Hi-Ho Silver and Tonto are no way in the stock again. And you could see Disney out recent highs. So Disney's at sort of an area of a 1, 2, 3, 4 top. If it takes out that trend line, I think Disney's in a position to run. It's had multiple kahunas, lots of pocket pivots, pays a small dividend, 1.1%, trades at a multiple of about 20, and you could see it's got some earnings per share growth. I'd also want to see it take this out because this is likely to be a site of resistance. Don't know how many people are still in Lions Gate, but talk about a steady eddy, lower left, upper right. A little bit of a pullback here, probably give us their buy opportunity. Everything is green. So when I do top-down investing, I always look at the top 10 list. And the 10th one here is thrifts and mortgages. And let's look at a couple of these stocks that might be interesting from the perspective of a dividend. And there's a couple here that are different that I'll look at as well. So Annaly Capital Mortgage. I think we talked about this last week. It got above the 50, had a pocket pivot, DI crossover, pretty much everything is green, and it pays a 13% dividend, has a 31% short interest. I like it. I may be nuts, but I call that a special situation. American Capital Agency, similar pattern. It pays a 17.7% dividend. So obviously, these are in the mortgage, thrifts, REITs. Interest rates rising are bad for these. Maybe this is a sign that they don't think interest rates are going up that high. There's a lot of these stocks in here. American Capital Mortgage Investment, same pattern, maybe a little bit less bad pattern, and it's got a dividend yield of 15.5%. Buy at your own risk, but you probably should have one of those in your portfolio. OCN, whatever. I love this stock, continues to run. Pulled back last week, had a pocket pivot on Friday. I'm looking for good things in this week. Great earnings per share growth. And NSM is in the same group and looks just like it. these are different. They're buying and servicers. I don't think they take the same type of a risk as a REIT and a mortgage thrift. Here's NSM, a couple day pullback, looks like it wants to run. Great earnings per share, and WAC is also in this group. Now I like to look beyond the top 10 and see if there's anything that's interesting that I wanted to point out. Tesla had a tough week, automobiles pulled down. Casino and gaming. I don't get this group, but I own a bunch of them because who cares if I get it or not, they're working. Just go through these very quickly, and I want one or two of them. MGM, lower left, upper right, don't like the earnings per share growth, but the chart's outstanding, continues to run, pocket pit, potential add-on buy. Las Vegas Sands, better fundamentals, not a better chart, gapped up here. It's got a big Macau presence, that's why it's doing well. Boy, Amy, don't know much about this one, but looks like after a shallow sort of base on base, looks like it wants to run everything turning green. It looks like it wants to start making money. International gaming technology, someone's got to make the tools that they use. You can see a nice pattern there. The ones I want to point out, MPEL is a stock that I own. It's got earnings per share growth. This is a big player on Macau, and Macau is doing very well. Don't know anything about Pinnacle. Don't know anything about Pinnacle. For all I know is they said they're going to become a REIT. But take a look at Pinnacle. Lower left, upper right. Gone sideways for about a week. Awesome earnings per share growth coming to stock. And oh, by the way, it's a cheap stock, $25 early in its cycle. I'm interested in that one. And then I know some people are looking at Century Casinos, another young one. And you can see a move off the Kahuna off the 50, and then it's just a big move up here. Earnings per share growth. Now, sometimes I go to sleep worrying about this one. I own big position this one. It's had a huge run. And, you talk about MGM not making money. This guy's run from basically $5 up to $25. This is Caesars Entertainment. And no earnings per share, tons of debt, and it keeps running. I don't understand it. I take profits regularly, and what I basically do is I buy calls. They run up. I sell them. I buy more calls further out at higher strike prices, and I try and take money out as it goes. But you don't need the earnings, obviously, to make money in this group. Oil, gas, exploration down to here. And there's a number of juniors of this that I like that I'll point out. I also mentioned refiners. They made the list as well. And so I think there's some interesting things going there. That's my review from the top. Very quickly, as it's now 6 o'clock and I want to go eat some dinner and let this prepare so I can upload it. If I go into my sprinters, remember I talk about sprinters as a great way of finding top stocks. You'll find on this list a lot of the stocks we looked at and then some others that we didn't. So you might find this is more a bottoms-up approach, looking at some of the best stocks right now. Regeneron Pharmaceuticals are very expensive, but only expensive because they don't do a lot of splits. They make a drug for macular degeneration and eye disease. They've been a big leader. We've talked about them several times, breaking out to all-time highs. What else was interesting? USANA, something's going on in managed care, and I don't know if it's a belief that Obamacare is going to fall, but one of the ones I liked is Centene. That's not Centene. All right, I'll have to get you Centene. Hold on a second. Centene is... Centene Corporation is one of the ones that I'm looking at. Great earnings per share growth. It's a managed Medicaid and Medicare insureds. You probably remember WCG in the past. This one seems to be taken off as well. So you might look at sprinters to find a list of stocks that you like. Other things that I like to do is I like to go into my designer, go into Tools, Group Inclusion Report, It's one of the things you can only do in HGSI, by the way. Clear everything, and let's do strategies, morales and catchers. So let's look at Bible gap ups. Let's look at pocket pivots. Then let's go into Woodward and Brown and take my favorites. Let's get best of. This demand, growth stocks is on fire. Best criteria, ERG 240, growth, HGS leaders, QEPs, stocks and groups to the upside, EPS. Make a group. We're going to call this AAA Web Top 10. This is 9.15. We only want the top 10 or so. We'll hit OK. And that's going to ask me to name it, so we'll call it top 10. Yes, replace. These are the stocks that show up on the most of the smart group list as being good groups to buy right now. So this is purely bottoms up. Method I want to look at. PGT I want to look at. We already looked at Ulta and Lionsgate. I don't want to look at Storm Ruger because I don't believe in guns. I'm kidding. We can look at this. Here's OCN, gambling stocks, etc. So I do that. So what I do, every night I do a GIF and I look at the top 30. I do sprinters, I look at those. I look at my holdings and I do that quick top-down review to find stocks that might be interesting. So very quickly, I know I'm getting late in the tooth. And as I said, didn't want to go much beyond 6. User groups, and let's open up Web Gems. So let's look at the top. These were, oh, wrong one. Sorry about that. It's going to take a second for it to stop. One. Today's? Yeah, it's today's. And I'll go into scorecard no index. So these were the top 9 stocks from the group inclusion filter. Let's look at these very quickly. Then I'm going to show you my buy watch list because I've shown that one off the last couple of weeks. There's been a lot of strong stocks there. And then I'm going to say good night and wish you all a happy week. So don't have to repeat things. Regeneron, I already said, is a leader. It's a market leader right now, breaking out to all new highs in the biotech space. Brunswick, I used to think of them as a bowling company, but I guess they have a lot of recreational toys, leisure products. Also, got earnings per share. It's at a double top, but pocket pivot into it. Be interested to see if it breaks out into new highs. Stewart, again, talk about them as being a gun play. Makes money, although earnings per share growth falling off. Smith & Wesson, similar pattern. Legislative risk. PGT makes aluminum siding for houses in a lower left, upper right. I don't know if this will do what Lumber Liquidators does and take off despite the housing market being tough. Got great earnings per share growth, pulling back to a good place to buy on the 50. Ulta Salon breaking out retail, already saw that with the Bible gap. Omnicell makes some equipment for drug storage and security in hospitals, lower left, upper right, earnings per share growth. Not my favorite company, not a bad looking chart though. Netflix is one that I'm very interested in. Look at this earnings per share growth. I've talked about it several times. Had a Bible gap up about 3 weeks ago. Flag formation, looks like it wants to run again. Everything is green. This should be on your watch list. See what it does. Look, you know, buy it if it takes out the high, and then, you know, I might give it some room and set my stop down here and ride up the 17-day moving average. That's about $3 room I'm giving it, but this is one I think is going to be a leader. Kahuna's breaking through the 50 was when it was a good time to buy the gap ups, maybe a little late, but I think this is one that continues to run. Already looked at Lionsgate as a leading stock, Owen Financial as a leading stock, and that's the 10. So there's a lot of convergence between the top down and the bottoms up. I like to end by looking at my buy watch list and make a few comments about it. Many of these we've already looked at. Method, PGT, Orbitz, Netkin, NSM. United Natural Foods had a big move last week. Food distributors. CardioNet has recently got reimbursement for its technology and healthcare. OSIN, Spirit we looked at, Lionsgate, looked at Endocyte. Looked at a lot of these already, so I don't want to spend too much. Let's look at a couple of the things on the bottom. I am not advocating buying a falling knife. So Ian, if you're looking at this and say, Jeffrey, I didn't teach you to buy falling knives, I agree. I think we've got a bottom in refiners. I'll be the only one that thinks we have a bottom in refiners. They've got earnings per share growth in some of them. Some, like this one, pay a ridiculous dividend of 20%. I want to buy these when they're cheap. Now, it's a high-risk buy here. You got a kahuna. Everything is saying don't buy, don't buy, don't buy. Refiners made it on the list. I think they're going to have a bottoming formation. Find your poison. That's CVR. PVF is another small refiner. And you can see it's got a break above its falling 50, but it's had multiple kahunas in a row. Break above the 50 becomes interesting, pays a 5.4% dividend. We looked at Annaly. Here's Apollo Residential Mortgage. Again, same pattern. As long as it stays above that 50, I'm happy. Had a kahuna, pays a dividend of 18%. You know, all of these are risk plays that I'm showing you on the bottom fishers. You don't put your life savings in them, but you might want to play. I think there's some junior oils that look exciting. Kodak is one that I've been in. And it's a nice move up. And what I really like, it's finally taken out 11, which has been forever been resistance. So it closed above its long-term resistance. It has great earnings per share growth. It's never had much PE respect. Here's one that I think could be interesting to play. There's a number of junior oils that looked interesting this week. And then I guess I'll finish with a couple of my favorite healthcare stocks I own. One of them is Valiant. Why do I like it? Let me get out of the weekly. Well, you can see the weekly why I like it. I've been in this one for a long time. I like it because it's going sideways down to a rising 50-day moving average. If I get a kahuna or a pocket pivot, it might be time to add more. I think this does go to 120, like somebody sent me an email on. And the other one that I like here in the farm, I like Jazz. Pulling back to the 17, makes money. It's got the benefit of being Irish-based and a potential takeout candidate. And just to finish, I don't recommend this, but I just want to comment about Q-Core. It's pulling back to its 50. Put it on your watch list. If it lives on the 50 and fires a couple of kahunas and moves off the 50, this has been a good time to buy it in the past. On that note, quick look at the quick look at the futures, and then we'll say goodnight. Not that I want to go outside. It's storming right now. The big news about Summers withdrawing. I don't know if the market will say it's a positive or a negative, but it's big news. DG, sorry. I think we could say that the market views Summers leaving as a positive, as the futures are up 18. Wow, I knew the futures would pop. That's why I started my broadcast with that. They popped big. We'll see if they hold it. Weak dollar, better stock market, no Larry Summers. All right, everybody, great week. I hope to see a lot of you in Palos Verdes. Those that live in Southern California, you can get a little bit of this the week before at the Orange County meeting led by Greg Mills, but this could be the last PV meeting. I hope to see you there. Good night, everybody.